Okay, in the subject matter jurisdiction video, I touched on the powers to tax under the Constitution, and I think maybe we should go back and review that. The original Constitution, the original body of the Constitution, without the amendments other than the Bill of Rights, the first 10 amendments, the original Constitution provided basically four powers to tax. One power to tax directly, and the other to tax indirectly, and the indirect powers are broken into three different categories. Okay, first, direct taxation. The courts have held historically that all taxes on persons and property are direct taxes. And those taxes, under Article 1, Section 2, Clause 3, says representatives and direct taxes shall be apportioned amongst the several states. Now, what this apportionment clause means is that the American people can never be asked by the federal government to pay the tax directly. The tax is apportioned to the state government. Now, Article 1, Section 9, Clause 4 says no capitation or otherwise direct tax shall be laid unless in proportion to the census hereinbefore required to be taken. These two clauses, the apportionment requirement of 123 and the proportionate imposition of 194, together make up the power to tax directly. And what this means is that if the federal government wants to tax directly, the first thing it has to do is announce the amount of money to be raised by the tax. The reason why it has to announce the amount of money to be raised by the tax is because it's impossible to apportion to each state their proportionate share of the tax to be paid unless you know the total amount. The states can't be told you owe 10%. 10% of what? 10% of what? Well, the way it works is you look to the last census, and I'm going to use a pure hypothetical here. Let's suppose the last census taken said 10% of the population lived in California. Well, then, if the federal government, Congress, passed a direct tax to raise $100 billion, California would be sent a bill for 10%, their proportionate share of the total population. They would be sent a bill for 10% of the $100 billion. So California would have to pay $10 billion. If the census showed that Delaware or Wyoming only had 1% of the population, they would get a bill for $1 billion. Each state gets their proportionate share under the census, and the state pays the tax to the federal government, to the Treasury. Citizens aren't touched. Now, the states can raise the money to pay the direct tax any way that is constitutionally within their granted powers to raise money. They can build tolls, they can lay a tax, they can tax a highway, they can tax goods. Any constitutional power that the state's power gives them to tax can be used against the people of the state to raise the money for the state to be able to pay the direct tax to the federal government. But the people will never pay a direct tax to the federal government. They may be asked to pay a proportionate share by their state legislature, but they'll never be asked to pay by the Fed. And generally, the state finds some non-invasive way to raise the funds. They can take money from the Treasury. They can let a bond to raise the money. They can increase the sales tax. They can have a special tax on anything they want. Gasoline, food, restaurants. So the state raises the money and pays the direct tax to the federal government. It's controlled, Article 1, Section 2, Clause 3, Article 1, Section 9, Clause 4. Now, the other power is indirect taxation. Indirect taxation, the powers are provided under Article 1, Section 8, Clause 1, which says Congress shall have power to lay and collect taxes, impost, duty, and excise. It goes on to say that all impost, duties, and excises shall be uniform throughout the United States, throughout the 50 states. So each power has a particular limitation that applies to it. Direct taxes are limited by the apportionment clause, which requires they be paid by the state in the bill presented to the state, not the people. And the indirect powers to tax by impost, duty, and excise have a uniformity clause, which says the tax has to be uniformly applied to everyone. So The impost power is the power to tax foreign activities. That's foreign persons here in America or any persons in a foreign place that the federal government controls, like territories or jurisdictions, or in a foreign country under a tax treaty, or imported goods, revenue derived from imported goods. So impost is the power to tax foreign activities. Foreigners here, everybody in foreign places the government controls, foreign imports, and in foreign countries under tax treaty. That's the power to tax by impost. Impost taxing powers don't reach the labors or activities of the American people conducted by right within the 50 states without use of any import-export activities. Duties, the second power to tax under Article 1, Section 8. Impost is the first, duty is the second. Duty is the power to tax goods being exported from the United States for sale in foreign markets. Now, we don't have any duties. We don't have any natural resource shortages or goods shortages that makes the government want to keep all of them here in the United States, and we don't punish our manufacturers for successfully selling into overseas markets. We encourage it. In fact, we have duty-free shops, but only after you go through the security checkpoint at the international terminal. Because to go through the security checkpoint, you have to have a ticket. And at the international terminal, if you have a ticket, you're leaving the country. So once you've gone through security, you can shop duty-free. All of the American taxes are suspended. And you can buy the goods without taxation to take out of the country with you, either for consumption or resale. So duties tax exported goods, and we basically have forgone the power to tax by duty. We don't do that. So imposts tax foreign activity, duties tax exports, which don't come into play, and the power to tax by excise was defined by the Supreme Court in 1911 in Flint v. Stone Tracy, 220 U.S. 107, 1911. And in it they said that the power to tax by excise is the power to tax the manufacture, consumption, and sale of commodities within the country. Things like alcohol, tobacco, firearms, etc. It's the power to tax licenses to pursue certain occupations, like selling alcohol, tobacco, and firearms, and it's the power to tax the corporate privilege, where it is the privilege that is the subject to the tax, either the license or the privilege of incorporation that is the subject of the tax. And income is merely the yardstick that measures the amount of taxable tax that's owed based on the earnings derived from the taxable activity subject to an imposed duty or excise. Now, there is no taxable income derived from anything that isn't subject to an imposed duty or excise. If you're not subject to a federal taxing power, you can't have federally taxable income. So impost taxes foreign, duty taxes exports, excise taxes corporations, licenses, and commodities. Where's the power to tax labor? Doesn't exist unless it's imposed as an impost taxing the labor of foreign persons. Impost, duty, and excise don't tax the labors of American people. Never did, never has. Didn't do it before the 16th Amendment, doesn't do it after the 16th Amendment. So, you have the power to tax by impost, duty, and excise. None of those powers touch the American people or their activities with legal effect unless it involves alcohol, tobacco, firearms, import, export, or corporate operations. Direct taxes are apportioned to the states, so the people were free. There was no power to reach the labor of the American people derived from the simple exercise of the right to work, where rights, of course, aren't taxable activities or possessions, not to the federal government, not to the state government. Rights come from God, and the Fed can't tax you for them. The Supreme Court ruled as recently in 1964 in Harper v. Virginia Board of Electors that you can't tax the right to vote. You can't tax the right to vote. You certainly can't tax the right to work. It comes under the pursuit of happiness. Your right to live your life and pursue the things that you see fit to do to maintain the level and quality of life that satisfies you. So, before the 16th Amendment, there was absolutely no authority to tax the labor of the American people. And that's why the federal government today has to argue and deceive you, lie to you, defraud you, to convince you that it's the 16th Amendment that creates the power to tax. But these rulings that it's the 16th Amendment have only existed since the early 1960s. Just like Roe v. Wade, just like affirmative action, the two other liberal justice theories put into operation by decisions that are absolutely unconstitutional. Roe v. Wade's just been thrown away. It should never have been a federal issue. It's a state issue. The federal government's out of it. Affirmative action's just been thrown away for college admissions. They made it up. The solution to discrimination is not reverse discrimination. More discrimination doesn't settle the problem. An eye for an eye leaves the world blind. So this whole system of federal personal income taxation has been a fraud since the end of World War II. And it was then, in World War II, that was the first time in American history that the federal government attached itself to the labors of the American people. And that was in the victory tax. But that was a 2-year war revenue measure. And after 2 years, at the end of 1944, it expired and fell off the books. And you can just bet Congress looked around and said, oh my God, nobody sued. We got away with it. We attached ourselves directly to the labors of the American people and nobody said a word. They all bought into the need to sacrifice to save the planet, to defeat the Germans in the European theater and the Imperial Japanese in the Pacific theater, and we did. And they bought into the public sacrifice to serve. And when the law expired, the government looked around and said, we can't let this power die. And they reenacted a piece of legislation called the Current Tax Withholding Act in 1945 that is today the Subtitle C employment tax laws that have enslaved you. And the other videos are going to address that.